All right, folks, welcome back. This is our midweek review for the ICT mentorship. Okay, so I got a lot of feedback on last night's video. A lot of things clicked for a lot of you in here. And that's the benefit of having been with me for a while, because it's one thing to have a lot of information thrown at you or shot in your face like a fire hose. Drinking from that is a little difficult, but when you take the time and strip away the majority of everything you've learned, this is what I meant by saying, looking for things that resonate with you, trying not to add every tool for every situation. And by having a model as clean and easy and just low maintenance as the one I've shown on the YouTube channel, it just makes things come together a lot easier. I'm very thankful for those that were sharing their elation. All right, so anyway, I'll try to get through this tonight. And here's the daily chart for the dollar index. As you can see, as luck would have it, we have the dollar going above our initial target here. Completely random. And we'll be looking for the buy side liquidity here. That's the next draw on liquidity. I like to see it run up into there. And I want to see it go through it with aggression. I don't want to just go slightly above it. I want to see it just plow through it. And there's a lot of concern about war. There's a lot of concern about interest rate hikes, and obviously the stock market getting decimated. All those things were contributing factors to why I said I thought that the dollar index would go higher. So there's like that fundamental backdrop if you want to look for those types of things. But I'm predominantly leaning on the fact that if it doesn't show it in the chart, all that stuff could just be, useless information and opinion. So we're going to continue with a higher price in dollar. All right, 60-minute chart hourly on dollar index. All of this here is the result of FOMC. Ran above buy side, really nice late day rally, and a little bit of room till we get up into that area here on the old daily highs. 15-minute time frame, again, just explodes on the upside. Buy side resting here. And if you study this little area right in here on those really small minute time frames, I think you'll be surprised what you see in there. I'll leave that for you to discover on your own. All right, the euro dollar daily chart. So far we had that run back up into here, and heaviness, a small little imbalance. We trade up into that. Institutional order flow entry drill, sells off. Right over here, sell side liquidity, we're looking for that next. And that little blue line, I've been really wanting to see that level get hit. So that's why I've been leaving it here. It's kind of like a moral victory. I showed my son that level, and it's been, good grief, it's been the entire month of December, the entire month of January. And look at this weird price range. But now if you zoom out, which I'm not going to do, if you zoom out, all this was just a return back into an imbalance and then dropping down. So there's a lot of distortion here on the daily chart, which is what? Exactly why I say December and January, just leave it alone. You're going to get caught up in those types of things and think every little wiggle and waggle is going to be a significant factor in determining what it's going to do. You just give it time. Just give it time, and you'll see the benefits of doing that. Now, as I said, there's been years since I've been doing the mentorship where December and January have had movement that were favorable. Still doesn't change the fact that I like that rule. Now, I know some of you are thinking, well, they're talking out both sides of your mouth, Michael. Right now you're trading a live account with index futures and showing everybody over there in the YouTube community what it's all about. Well, not technically. I'm easing into that. Okay, but I'm trying to prove with that account that income is certainly something within my capability. I don't need to do a 9-to-5 type thing, and I don't need to be making a lot of money. I don't need to be running accounts up to millions of dollars to do very well, and I can trade with one contract and do very handsomely and not do a whole lot to get it. That's really just one trade. And I was asked by a member, and I know why they asked, and I'll get to that when we get to the end of the video here, but they wanted to see the details about the 21st of January. I got you covered. But looking at this Euro dollar. Let's get back to this because I don't want to go down all these different rabbit trails because I have a lot of them I can run with today. But heaviness in the euro dollar, we're expecting that to continue. Sell side below here and here. Okay. Complete closure on the imbalance at 111.5. All right, euro dollar hourly chart. See here we have market structure break there. Notice I said break, okay? Because we're looking for a longer term duration lower. So this run below here and that imbalance, fair value gap, trade up into it, sells off. Okay, you can see that fair value gap here in the view of a 15-minute time frame, which makes use of two 15-minute candles, relative equal highs, runs up, takes the stops, sells off. Really, really nice volatility today. Pound dollar, daily chart, weakness. We've had a nice little institutional order flow entry drone here. And then this is my next downside objective. And if we get really rolling on the upside with dollar, like say war breaks out, okay? Man, dollar index could go vertical. Like it can go back above a full dollar. And that, to me, would spell a run way below these lows on pound. But near term, we're just looking for that. First objective is the premium high of the BISI. All right, so we are looking at the hourly chart here. Just a weird consolidation in here. It comes out, rebalances all the SIBI here. And then FOMC comes out and makes a run for the rejection block in here. Here, right over there. Sell side's the next objective. We could dip up into that a little bit, but I'd rather not see that. I like to see it stay open. And the 15-minute time frame, not much more detail. Pretty much the same thing we saw on the 60-minute chart. All right, the E-mini markets. On the left-hand side, we have E-mini SPOOs or S&P and E-mini NASDAQ futures on the right. Higher high in the S&P, lower high on the NASDAQ. Even on the smaller high here. Higher highs on the S&P, lower highs here on the NASDAQ. That's why I said that NASDAQ was going to be the weaker sister of all three, and it's basically been destroyed. Okay, it's been a huge decline. This low, once we traded through that the other day, I gave a commentary saying that I felt that that was capitulation, and I saw someone post, and I forget exactly who it was, but someone asked, why did I mention this was possibly capitulation? Well, we went below the low, and because we've extended such a far reach down into that, the next day, look at the open to the low. Consequent encroachment in here. We dug into that. It's not likely to go down below that low again. And it just did a lot of back and forth yesterday. And then today, we opened down here and then had all this run back up into this fair value gap. Then gave up the ghost and came back off of that again. So when this was rallying intraday today, I was watching this volume imbalance. I thought for sure that we would trade back up into that. If it would have traded like 14,800, oh, I would have been in that with one futures contract and holding it for a run down into that 14,000. So that would have been 800 times $20. That would have been a beautiful, a beautiful little showcase. But I got to remember, I'm trying to prove income. Okay, I'm trying to keep things in the realm of realistic for people that are watching on the YouTube channel, because I don't want to entice them thinking that, wow, I can do that. No, it's going to take a long time for you to get that good. But I'm trying to pick one really good setup when it's intraday, and I'm taking it, aiming for a good chunk of handles, and 50 handles, 60 handles. I'm over several hundred full handles of index trading. So I'm like, and it's because of the volatility, don't get me wrong. It's not going to be always this easy for me to find these types of setups. But I don't need to have these big setups. So if you're trying to find 25 handles or 25 to 50 handles, or 25 to 75 handles, kind of like what I teach in the Forex market, you can do very well. And just let the money manager do its thing. And when you can afford to do another contract, then you do that. And you build it up from micro to mini. And then after that, the sky is not the limit. It's just a matter of how much you want to put into the effort and whatever risks would be associated with that, obviously. I teach you consequent encroachment on these tails and wicks. And I felt that we would have some movement off of that. And we had, obviously, the reason why I did that long yesterday. And I'm not going to teach that, obviously, in the YouTube channel. That's for all of you, but we'll look at that in a moment. Okay, so the E-mini S&P hourly on the left-hand side, look real close. We drove down below its low as well. Then we had this low and a higher low. At the same time, that low is this low in S&P for NASDAQ. NASDAQ is over here. S&P is over here. S&P creates a higher low while NASDAQ went lower. So that's an SMT divergence. Index SMT divergence, indicating there is an imbalance between those markets, and it's likely to reach for the buy side liquidity. Where would that be? Here, buy side. In here, buy side. Why? FOMC. FOMC tends to draw in the market to a premium or a discount, and then it creates a big move. So it ran all the way back up to the buy stops and then crushed it. Same thing here. On the 15-minute time frame, S&P, same thing, running up in there, breaking down. The NASDAQ, pushing through and breaking lower. All right, so let's take a look at the S&P and the NASDAQ on a 3-minute chart. So you can see the market pumps up above those buy stops. Market structure shifts below the short-term low here. Does it create a fair value gap? Yes. You can trade it here, and it gives you one more chance in here. Go short, sell off. Fair value gap, consequent encroachment, short it, sells off. The NASDAQ takes the buy stops, trades lower. We have a fair value gap here and another fair value gap here. Now, on the YouTube channel I gave last night, a way of interpreting price action that if you have two fair value gaps, like you have one here and you have one here. In that example, I stated that I would allow it to trade up into that or trade down into it for the buy opportunity. I was showing an example of my live account. That I would watch it trade there, let it go, and then come back in here and then consolidate. And as long as the bodies of the candles were respecting that, then I would look at that as a buy. And then the wick down into the lower fair value gap in the example I showed last night, which we will revisit in a minute. The same signatures are occurring here. We just didn't get that little run up into that fair value gap. If I see that fair value gap like that and trades up here, I'm taking that entry. Okay, I'm telling you all that here. But I will do the bulk of my position here. Okay, so in this area, I'm going to put the majority of the trade on here and then put something on here. So it might be a split. Maybe it's 80% of the position in here and 20% down here. So that's what I'm trying to do. If I am going to do that, what I'm going to try to do is, in the United States, we have first in, first out. So I want to put my positions on here first while it's in this area, and then later this one. That way I can take majority of the trade off, and when it's coming off, it won't affect the better position. So it's a little bit of order planning for trade management there. So just toss that in there for no extra charge. So anyway, the market breaks lower. Again, imbalance, consequent encroachment, almost gets in there. It doesn't quite get it here and folds over and goes lower. Just, man, it's just a lot of volatility and it's fun. It's almost like Willy Wonka's chocolate factory. I mean, I feel like a kid right now. I mean, I literally want to go crazy in here and start running both sides of the marketplace. But if I was being honest with you, I wish I would have waited until the second half of the year to do this mentorship on YouTube, because I'm only going to be doing it in a couple months. Man, like the volatility right now, I could have easily taken that TD Ameritrade account over $250,000, $300,000 by now. No exaggerations at all. Like up and down, up and down, up and down. And it's an itch that I'm dying to scratch. And, it's just nice to see that we've been in such a small little range for a long time with Forex, and then watching the futures markets move around like they are. It's just it's just nice. It feels like it feels like you've been tied up for months, and then they finally untie you and you feel like you're free. And it's just a beautiful thing when you see it in technical analysis, where your concepts are just speaking beautifully like poetry. All right, enough of that ICT. All right, so here's the teaching part on the PD arrays as a revisit. A volume imbalance is the topic for tonight. And I want to take your attention over here to gold. Oh, we haven't talked about gold in a while. So here is gold. Look at this area in here. See all the bodies of the candle in here? Look at the volume imbalance here and here. Is this not an island reversal? That's exactly what I taught on the volume imbalance. Well, it's occurring here. Now, when you have something like this, it's going to act just like a fair value gap or a SIBI or a BISI when it trades back up into it. And look what it does here in gold. Trades right up into it here. Now, once it does this return from this high to low premium up here, once it hits that, where can it trade to? Well, we have this area here with a low. We have the order block, swing low, and now look at this, volume imbalance. So I would have that on my chart, looking around the 1800, maybe 1897-ish, 98. That would be an area I'd like to see traded to, and then down here. And then we have another volume imbalance there. So there's several targets you can use with a volume imbalance, but it's also hinging on whether or not the dollar index continues higher. If it does continue to go higher, this is going to be very heavy for gold. And on a 50-minute time frame, gold futures, you can see it runs up into that premium high, the volume imbalance there. Then there's a displacement, short-term low. See that? Broken. So now we run back into it. You can go short. Then enter time distortion. Then it breaks lower. Now, once we have this move here and it breaks down, all of this, I'm not interested in that, because what is it doing? It's waiting for FOMC. So this candle, and this candle, I like that. So I would look at this as a fair value gap and ignore all this until we get up to here. What's it doing? It's going right back into that fair value gap right there on that candle. So I know this topic of time distortion has caused a lot of questions in the mentorship student base here. Not everyone's confused about it, but some of the individuals, especially for 2021 group that just came in the last group, they're like, can you go, I don't really understand. It wouldn't be realistic for you to be expected to understand it just the few times I've talked about it. It's like an ongoing thing that we'll revisit, okay? So I can't obviously answer it and exhaust it in one or two or even a few handfuls of discussions, because you have to see examples of it, okay? And by experience and seeing me interpret price action and showing you why I would be looking at it the way I look at it, you'll learn it by experience. There is no clear-cut rules where it's nothing scientific. It's not scientific, let's put it that way. In other words, I can't say, you do it this way every single time, this is the recipe, you'll always get the results that come out like a blue ribbon, cake or whatever you'd be trying to produce at the end. It's this suggestions that I use to try to filter out the quote-unquote noise, the things that are in the chart that I don't care about. And by taking them out of my perspective and price, it allows me to go right in there and see the inside underpinnings, and then it clears it all up, whereas everyone else would be looking at that thinking, I don't know what's going on. So volume imbalance here shows an island reversal. That's the objective I would look for gold for right now. All right, E-mini NASDAQ March contract, and I'm showing you January 24th, 2022, this buy side imbalance, sell side inefficiency. Okay, you find that on the 2-minute chart. See that up here? This is the underpinnings of the setup I shared yesterday. Okay, into that example, if you take your fib from this high down to that low, the 50 level is here. So that's equilibrium. This and this are your anchor points for the SIBI, but we're just looking at that as an imbalance, okay? We have a short-term low that gets broken. So retail sees this low and it rallied up. Well, that's support. It should bounce again. Well, it doesn't. It goes through it. And it goes into that January 24th, 2022 imbalance. Buy side imbalance, sell side inefficiency. The high and the low, which you can see those levels are here. Consequent encroachment right here. It trades down into that. Then we create a short-term high. It trades down into that imbalance again, and then price is sent higher. So we have a market structure shift here. Bullish. Imbalance. Imbalance. Using what I just taught you earlier in this video, I would do my initial positions in here on the larger side. In other words, when we're up here, as it's trading down into that, the majority of my trade I'm going to try to put in here. And if I can get something in this area, I'll try to do it as well. So hopefully I can take something off and it would, in theory, not eat away at the better fill, which would be later. So first in, first out. So if I'm buying in here and I'm selling off positions, it's going to hopefully erode some of the position here and allow me to keep this better fill down here for any partial that would be left on if I'm going to do something like that. So don't think for a minute that I wouldn't consider entering down here. I'm not trying to teach the level of mentorship that you all are entitled to. You paid for it, and that's the difference, okay? What they got last night, many of them, if you saw the comments I'm getting, because I opened the comment section up just for fun, and man, the level of appreciation and adoration and love, it's beautiful. It made me cry several times reading some of the posts. But it's not my intent to obviously make those public. And of course, the goobers that are trolling me all the time on YouTube, they made their way in there. Don't worry, I got something for you in a couple minutes. So that's the difference between what you're learning here versus what I've shared there last night. But they got a really, really good teaching last night. I mean, I really would have paid money to learn what I produced last night. If I didn't have any understanding of what all those things were and someone was making it available to me, I would feel like I paid good money for good insight and not have any regrets, because that was some really solid stuff. And I think it resonated with a lot of folks. And again, like I mentioned by opening this video up tonight, it resonated with a lot of you here. And that's awesome. That's what I'm trying to do. And I feel like I caught a second wind. I love teaching. And I don't mean to sound like I don't love all of you in here, because I do. But I like tapping in to YouTube's community because they're passionate. They're really, really passionate, and they're hungry. And they can't afford to be here, obviously, because they would have been here. But their passion, I like tapping into that, and it's infectious. Okay, it inspires me to do really well and to teach things that will hopefully benefit them. And then I take that inspiration and that motivation and momentum that I get from that community, and I take it right into here. And it just makes it more lively for me, because sometimes it does wear me down. And I'm doing a lot of videos here, which, let me bring this up to you now, because I got an email memberships here. What is the schedule for videos in this mentorship now? Well, as I mentioned, I'm going to be doing a video on YouTube on Tuesdays and Thursdays. When you subscribed here, you were not promised a video on Tuesday and Thursday. So I got to be more economical with my time. So you'll have a membership commentary on Monday here. You'll have something like you saw obviously last night on YouTube. That's free, but everybody has access to that. And then on Wednesday, we do our midweek review here. And then I'll do a video on Thursday on YouTube. And then I'll do a video here on Friday. Okay, so you were promised when you enrolled 2 videos a week, and that's what you're getting. But I also promised on the other end of March, we're dropping down to 1 video here. And I want to slow that process down because you have to get all your videos downloaded by June 1st. Because June 1st, I will not be restarting the payments on a new contract with the servers that I purchased and use right now, because I'm not collecting money anymore and it's extremely expensive. I love all of you, but it's not something I'm going to continuously pay for out of my pocket because you haven't listened and downloaded the videos when you were told when you first enrolled, download them. Okay. Start going through the process of downloading them. It does not take long. I know there's a lot of them, but it does not take that long, folks. And you have plenty of time between now and the 1st of June. So make it a point to try to get in there and start doing that. If you get a 1 terabyte or 2 terabyte solid state external hard drive, it's kind of like a little bit bigger than a Zippo lighter. And it's just a real nice piece of hardware. You can get that off of Amazon for a couple $100. Get yourself a nice little case with it, and man, you'll have more than enough space to take everything that you see in this mentorship and anything I start producing in the forum, because that's where we're moving. We're moving predominantly into our forum, and I'll be teaching through charts, and maybe I'll do PDFs once in a while. But the main thing is I need to be able to have my time back, and I can still do teachings in the forum with a chart, with annotations, because you all know what I'm talking about now. You have the language, but it's important, real important for you to start downloading those videos, because I'm not going to be making them available for those individuals that didn't do this. And if you don't download them, then you miss that opportunity, because I've given you a year in advance. I told the last group when they came in, start downloading them. I told everybody when they were joining that were already members here, start downloading your videos, because we're done. So if you ever doubted, okay, if you doubted that I was, going to do another mentorship, okay, trust me, I'm not. I'm done. I'm tired. I'm going to be 50 in August. I want to have my golden years, okay? I want to relax. I think I earned it. But I'm not leaving this community. I'm just making it a little bit easier for me and timelier. It's going to be easier for you to get to the information quicker. You won't have to sit through these long-winded videos. You'll go right to a chart. You'll see what I'm talking about, and boom, it's done. In a couple minutes, you'll have everything that I would have drawn your attention to without any kind of distractions or other extra, stuff. So there you go. Start downloading the videos and organize them by month. All right, so I got a question from one of the members here, and I know they just want to run off and tell one of my trolls this is what he showed in the mentorship video, which I already believe he's already here, and he's under the name of a person in Australia. So I just let you know that. And I know your username, so it's not a big deal. I don't care. So if you're looking at the 21st of January, okay, this is the fluctuations and the turning points, and these are the executions. You can see them by time, match them all up, and you can see exactly what I was showing. This is where I was putting in the trades with the little toggle that says send orders. Something I forgot what it says on the TD Ameritrade's platform, but there was a little toggle box, and I thought by clicking on that, it was going to pop up like a little information window saying, okay, if you do this, this is what's going to happen, blah, blah, blah. Well, in the process of going through the platform, trying to familiarize myself, when I saw a setup, like I wanted to sell short, like I wanted to go short, and I was putting orders together, and there's a way in here that I'm learning how to do it where I can put on a trade and the order cancel order, okay, OCL. And that's what I'm familiar with. When I was trading through Lindwall, that was how we put orders in. But like I said, I'm clumsy with it still, and who cares, okay? You can see clearly here, I know what I'm doing. I mean, you've been with me now for a number of years, and especially the last group. You've seen it. You know I can trade. I'm doing it with a live account now. But I know the person that's asking this is really just working to bring the information back to the guy over there on YouTube that's trying to make a name for himself, trolling me. That's okay. That's why I'm putting this here. Okay, so that way you can see it and you can choke on it. But here is me making a order entry mistake. and then correcting it here, going short, and this was the closure. And you can see all the times. I left this down here so that we can see all these little times, okay? All these transactions are occurring here, okay? I'm short technically 1 here because I went long to get short. No, I went short here, went down, and then it started going up. And I was like, okay, I can't get out of that with that position. So I didn't finesse it. I didn't get a way of fixing the error. So when it went up here, it caused me an opportunity to get short. So I had to sell after I reversed the 1 I had. So in other words, I was short 1, bought 2 to get out of the short and go long. Then in here, I'm short because I sold 2. So I'm technically 1 long, and then selling 2 puts me net short 1. So net short 1 here, all the way down here, and then right here is where I'm closing it. Then I'm buying 1. You can match all this up down here. Then I'm selling short by reversing. So I have 1 long here. I'm reversing. I'm using the tab in TradingView, not TradingView, TD Ameritrade. Reverse, okay? And it reverses, it sells the long I have, and it puts me in a short with 1 contract. Then I do the same thing down here. I cover the short by hitting reverse, and it puts me in net long 1 contract. I'm not long 2 contracts. I'm long 1. I sell 2. That gets me out of the long and puts me short 1. Then I hit reverse button, and it reverses me, covers the short 1 contract, and then puts me net long 1. Then over here, I just sell it. I don't reverse it. Then I buy it here. Then I sell it. Then I go short here 1, and then I cover here. All of that's seen down here. So the guy on YouTube is insisting that I added money to the account and these trades were not executed. Let me explain this, okay? Because I know you're listening. I cannot put anything out here that isn't true, okay? If I say it's a live account and I'm showing the results, guess what? They absolutely better be live results or I'm in trouble. But this year, I absolutely want to show everybody that this is what I could have been doing all along and much, much more. But I'm doing it as a final gesture of saying, okay, next year, I'm probably not going to be all that active on YouTube. Okay, and I'll probably be very, very slow in my participation in the forum because I have a life. I want to live. And while you also have access to me in the forum here, I don't want to make my life out there on YouTube. Okay, that's not where I'm going to be at. My wife has plans. My children are growing up. You know, I have things I have to take care of. And it takes a lot of time to do all these things. But I'm just putting that little bullet point on this year because there's been this doubt of, oh, he doesn't trade live. He can't trade a live account. He's afraid to do this. He's afraid to do that. You know, I'm tired of all that, okay? Nobody's going to doubt at the end of 2022, okay? They're going to have all the proof they'll ever need, and it's going to be fun. But this right here, this is just me just relaxingly just going in and trading the ebb and flow. I'm not even trying to be that precise. I'm not using anything. This is not Enigma, okay? So in case you're wondering, it's just me trading simple price action like I outlined last night on the YouTube channel. I literally showed what I was looking at when I did these things. That's it. So if you're trading a micro account and you're able to catch these types of moves, you're not making a lot of money, but you're collecting experience. And over time, if you got to the point where you were trading a mini, you know, this could add up pretty good. So there's your evidence. So I'm going to do another video, obviously, on Thursday night. And I will teach. I'm not sure what I'm going to teach. I got to take a look at my notes. I have everything written as far as how I want to deliver the things I want to teach on the YouTube teachings. But off the top of my head, I can't recall exactly what the topic's going to be tomorrow. But there'll be a video there tomorrow at 10 o'clock. There will not be a membership video here. Again, as a reminder, you were not promised that. You were promised 2 videos a week, but you're still getting 3. Okay, so please don't send me emails. Oh, well, you're taking your time and putting it over to YouTube. Look, don't. If you even think that that's a good idea to send me an email like that, let me remind you, please don't do that, because the only thing you're going to do is offend me, and I'm probably never going to want to read anything that you ever send me in the future. So I've already told everybody what I was going to do. It's a few months of my time over there. So that way it's my final gesture to them, because I'm not doing mentorships anymore. Okay, I'm not. So if I lay something in their hands that they can use, it's tangible, it's real, and I'm using real money to prove that it works, hopefully they won't email me and ask me, hey, can you make an exception? I don't want to make any exceptions, okay? I don't want any more people doing anything asking me to join here, okay? I want the community to be what it is, and that's it. And I think that's reasonable, okay? So that's going to be it for tonight. I will touch base with you tomorrow through YouTube, and until I talk to you then, be safe.